hone that skill, get your research, get your team, launch. Hopefully you're successful. Do it again.
Hello, everyone, and welcome to another episode of Test, Optimize, and Scale. Have a fellow crowdfund professional association board member on the show with us today. One of the top authorities, thought leaders in regulated investment crowdfunding with a focus on legal. Benji Taylor Jones, counsel at Smith Anderson Law Firm. It's a pleasure to have you on today. I know you're at the forefront of creation amount. Many of the rules, the laws, the exemptions that we operate off of here today. So it's a privilege to have you on.
Thank you, Jason. It's great to be here. Great to share something I care a lot about, and I know you care a lot about. So, what you want to know?
Certainly care a lot about it. I got to see Benji in action last month in Washington, D.C. around the CFPA conference and some of the meetings with the SEC, with some finance committee, with various governing bodies. And Benji, I thought we could provide listeners, viewers with more background on your history,
Sure.
the world of law, how you entered into this space of regulated investment crowdfunding. I thought we could begin there.
Sure. So 2012, the world of securities laws changed drastically when Congress, a bipartisan effort, adopted the Jobs Act of 2012. And it really put some fundamental changes in many aspects of the way securities lawyers had practiced for decades. And there were lots of different aspects of the Jobs Act, various titles. And at my firm, where I am now, I was kind of tasked with monitoring the Jobs Act, trying to push out general understanding of the changes that were implemented. And many aspects of the Jobs Act applied to public companies and the way they could do IPOs, the way they could advertise, et cetera, et cetera. And then there were several aspects of the Jobs Act that really focused on a private company capital raising. How do you raise capital from a variety of people and not go public, not be required to report to the SEC? And so there's various aspects in the Jobs Act that address that. But fundamentally, the real change that the Jobs Act put in place was it said, for a long, long time, we've been saying that companies that want to raise capital, which we call issuers, just so you know the lingo, issuers can't advertise to raise private money. You have to know these people. And the structure of the laws were fairly very protective. We've got to remember the context of when these laws were adopted. It was right after the Great Depression, where the stock market crashed and everyday people lost all of their money and had no transparency into the markets on how they were regulated. So there was a true kind of police effort in the 34 Act. And so there's kind of this, if you aren't a certain type of investor, if you're not a kind of a professional investor with enough money to lose, we're going to protect you. And so the rules basically said you can't advertise and find that retail investor to come into your deal. It's just the way we work. And with the Jobs Act, that got broken apart because in a couple of ways, we now are allowed, as long as we follow certain rules, to advertise the fact that a private company wants to raise capital. But we have to follow these rules on who can come into your deal and what you can say to attract these people, depending on who they are and which exemption, which path the Jobs Act created. And so I became kind of involved in understanding what those different paths and new rules meant and publishing them within my law firm, publishing them within kind of our clientele. And then two things kind of happened. One of the Jobs Act programs that was supposed to be adopted was regulation crowdfunding. And this was pretty monumental. It's fundamentally Kickstarter on steroids. So take a Kickstarter campaign on one platform and add in securities regulation. And that's what you kind of have. Oversimplified, but that's kind of what you have. But Congress adopted it, pretty complex legislation, and told the SEC that they needed to adopt rules in, I think it was 180 days. Well, that didn't happen. It took years. The Jobs Act was enacted in 2012, and regulation crowdfunding, ultimately the rules were published and went into effect in 2016. So one thing that some smart people, not me, thought about doing was using different exemptions to do the same thing we could do until the SEC adopted these new rules. And one of those things was called an intrastate offering exemption. So we all know about interstate commerce. If you cross from Virginia to North Carolina, you now can be regulated by the federal government because your goods or services have crossed a state line and you're now federally regulated. Well, intrastate commerce is commerce within a state. Similarly, there is an intrastate federal exemption. If you just do your offering within your state, the SEC won't regulate it. So there was this push for each state to adopt their own crowdfunding exemption while we were waiting from the SEC. And I was working on my states to do that. And different states took different avenues. I was working on that. And then I was also working with a micro lending real estate entity that wanted to use another new exemption or revised exemption, Regulation A. We also call it Regulation A+, or sometimes we call it Reg A, and we think we're, Marley, but Regulation A+. And they used Regulation A+ to micro loan real estate projects. And so that put me in the middle of one of the very first Regulation A+ offerings that got launched. That put me in the middle of understanding how crowdfunding was working. And then by the time 2016 rolled around, I was one of the only people who cared.
Quite the waiting game.
And so and then you have a time for an industry to develop, and
Right.
This industry is nascent. It's brand new, and the technology has to be developed. The understanding of how the rules work. We need vendors. It's a long, creative process, but really interesting and creative. It is one of those industries that when someone asks you, what does it look like today? You say, I don't know. I knew what it looks like yesterday, but I don't know what it looks like today. So that kind of launched me into the world. And then a while ago, I started a little boutique firm for a while with a great partner called Innovate Capital Law. And our goal was really to be advisors and to help strategize with clients who weren't necessarily your typical VC candidates on how to utilize all these myriad of different exemptions to raise capital, to grow, to scale, and hopefully ultimately succeed as a business and to implement their dream of what they're trying to do. So that's kind of, and now I'm back at Smith Anderson because my lovely partner retired, and it's hard to replace one person. So I just have 140 great people instead.
All about the team.
That's my story. That's my story.
Well, we definitely have that shared interest in supporting founders, having their dreams come to fruition. And I've been working on these campaigns since May of 2016 when Reg CF Title III of the Jobs Act went into place. I first heard about it in 2014 and was told it's not a matter of if anymore, just when.
When
So to think you were there championing for the entire vertical that was yet to be created, very impressive to me. And it is a creative space. It is exciting to see what's happened on the 8,000 plus Reg CF issuers. I should say campaigns, some issuers with multiple
right, multiples.
multiple raises at this point. We've worked with some groups on up to 6 rounds, including
Which is
Reg CF
great.
and Regulation A plus. I run into that Reg A issue as well too. If I go to a Reg A conference and share it with friends, family, even clients, they think I went to a reggae music festival and we're telling them. But I think that's part of the issue is there's a lack of awareness. I literally have to teach people on what regulated investment crowdfunding is on a daily basis, and it's been that case for the past 8 years at this point. Do you believe adoption has rolled out in a slower fashion than you originally had projected? I know you said 2021 that there's been different spikes that have occurred throughout the years,
Mm-hmm.
especially when Reg CF went from 1.07 million to 5 million back in March of 2021. Regulation A plus, you see, I make a point of saying Regulation A plus just so I don't get mistaken, but it still happens all the time. Regulation A plus from 50 to 75 million. There was definitely a lift
Yeah.
in terms of issuers and investors that were participating in the marketplace at that point. Has it been slower? And what do you think is going to ultimately lead to more mainstream types of coverage from publishers, from press, as well as issuers, investors entering into this ecosystem?
Uh, well, it's mostly learning. It's mostly
Sure.
a learning curve and
Sure.
getting educated and understanding what it looks like. I'm not really surprised at the path it took. Um, it was new and it was unknown, and it took a while for people to figure out how to make it work. And then, and while the thresholds were at 1 million, it was harder for economies of scale to get implemented for for kind of an accepted kind of process and accepted players to come into the industry. And when so to me it was kind of a trickle up. I did have North Carolina's first regulation A plus offering, did fine, but it wasn't gangbusters. And recognize also, we know that the median raise is less than $110,000, right? That doesn't mean that some people do more. That's median. 50% do more, 50% do less. But it's not a lot of money for the effort involved. From all of the industry players that touch that. I do think that the 5 million increase really changed the world because it let it costs the same amount to raise $100,000, maybe not in marketing, $100,000 from a compliance standpoint. Legal, sometimes accounting can be a little bit different, but fundamentals, it can be the same onboarding costs no matter what you raise. And so the more you can raise, the greater your margins, right? It's just like any product. The 5 million was a great uptick. I think that there is stickiness in the ecosystem around the expense and the time to get to launch that is really affecting a broad scale adoption of it as a tool. And I until we solve some of those problems, I think that's good. I see a lot of companies looking at crowdfunding as the Hail Mary solution. And it is not a Hail Mary solution. It is the solution. I was just talking to a client today, who I basically said, look, when I talk to people, either I say, you should never do this, it is not right for your business, or yes, let's go, or you need to wait. You're not ready. And this was a you're not ready client. Do I think you could do it? Yes, but I don't think you're ready. And lots of the you shouldn't do it and you're not ready's jump onto it. And I think that is, I wish that they were better prepared and better educated to understand the value of getting educated, understanding the time, decision-making, distraction, legal, accounting, compliance costs. Because I want people to be happy when they use this tool to raise capital. And it's not, I wish it was easy, but nothing really good in life is easy, right? We want to be like, we need to put the effort in to achieve what we want. So I would love to see something from a regulatory perspective that solved some of the stickiness that helped our smaller businesses raise, $250,000, $300,000, maybe every 12 months, maybe, so that they can grow and get cash in that they need to grow and scale without the distraction of what some of the compliance burdens are. I don't know if I answered your whole question.
Absolutely did. And there's a lot to unravel there. I like how you pointed to that number of 110K being the median, saying 50% of issuers are not going to raise more than that amount, statistically speaking.
And I would have to look at the data, whether or not that number includes failed offerings or not. I suspect that number is only looking at successful raises. And successful raises, in my mind, is a little skewed because usually you are putting a really low minimum, like $10,000. So I suspect that number doesn't even take into account the companies that launch and don't reach a minimum at all, right? So
I think you're correct. And I say that because when I've searched on King's Crowd, which lists Reg CF campaigns to date, when I've removed issuers that don't report an amount, and then looked at the data, it was around 100K for me. This is a few months back. So 110 sounds right on point.
Right.
And again, not including the ones that were taken down because they didn't hit their minimum per your point. I also saw it was really only 10% of issuers that surpassed 750K. Now I heard 10% surpassing 1 million this year from Brian Belay at King's Crowd at that conference in Washington, DC. I know in 2023, it was 7.46%. I study these numbers. I have a thirst for the data. Past $1 million in 2023. What's that?
I know who to ask when I need it. Okay, Jason,
Yes.
I need some numbers.
Yeah, no, please, because if I don't know them, I want to look them up and be able to speak to it. As a marketer, and we work on getting investors to these deals and then getting content to them to engage them to the point of investment and really tell them that story. It's crucial to perform competitor marketing audits.
Right.
You need to have a listening of what's occurring in the space. Issuers and investors. Hey, those investors you're targeting are likely going to see these other deals. So you really need to know what that conversation looks like, what retail investors and accredited investors are moving forward on today. So without studying
and the deal structure options, which is also something that I find is kind of a unfortunate haze for a lot of issuers. It might be a really lovely intersection between marketing and legal assistance, because surprisingly, companies are more willing to pay you for your work than they are to pay me for my work, which is, I'm prettier than you are,
It's true.
definitely. Anyway,
That's
but if part of your package is to be looking at market indicators, adding in the indicators about the type of the security that's being offered and the success in various industries, to me is critical to deciding
yes.
what kind of crowdfunding round you want to do. And that's part of that's really part of the issuer's job in deciding whether or not to do a crowdfunding round. Now, they may need marketing people and legal to help them understand this, but that's part of the haze that we have, right? That's part of the barrier to entry. And what makes it more expensive is because I think there's truly a lack of education, or just it's not just I'm deciding to do this, now we're going to do it, which is it's kind of shocking to me. I've been thinking about your themes that we're going to talk about at the end.
Yeah.
That people approach product development for their business or service development with a test optimized scale strategy. And they seem to not believe that they need to adopt the same strategy when selling the most important product they have, which is themselves and their company.
Yep.
Right. And so I think I did, part of this is also as an industry, as industry leaders, as working with all the vendors in the ecosystem, it's really about what are the fundamentals that people need to understand before they say, yes, I'm going to do this.
Yep.
And that's, not to jump ahead, but that's the test, right? That's the test area, right? Educate, do your research, right? On other models, on what worked for different people in what industry, what security works for you now, what might work in the future, why would you choose them differently? What does it mean to bring in thousands of people onto your cap table in an equity position, that a company that could grow and scale? There's some important ramifications of that there's a lot of hidden repercussions that just a good understanding of the X, Y, and Z is fundamental before you even think about picking up a pen to write a single piece of marketing material.
Absolutely. And I say that because, like you, I want to see a higher success rate industry wide. That's why I put out this content. That's why I do this research. That's why I try to participate in these different organizations, just like you. And I do believe the stats are already stronger than what I would anticipate towards the success of early stage startup businesses, raising capital through different VC, avenues. And I looked at comparable data. These stats are stronger. And like you said, not everyone can win. I've ran that scenario in my head as well, as how can every company be successful here? And the only way I could really see that happening is more of a selective process of who goes live. But I don't believe that's why these vehicles were created. It's democratization. Exactly. So there's going to be some failures. But meanwhile, you can give each issuer their best shot towards success that you can, reaching whole new audiences of investors. And on the other side of the table, the investors getting access to early stage deals that have the opportunity to go from, $10, $20 million valuations to, unicorn levels, and being able to participate in that upside, which was limited to the few.
But even the
back.
smaller return, immediate
absolutely.
ROI instruments are really important for this industry as well. The revenue share model, which really, quite frankly, I don't know why VCs don't snatch that up and run with it because it's non-dilutive. But the revenue share model for the right company, right? Doesn't fit for everybody, is a lovely win-win when it's done correctly, where you are getting an immediate return or a very soon some amount of return on your investment. Your owners feel like they're owners without you giving away voting or control issues. You eliminate a lot of the equity concerns that can, that some people say cap table questions. That's not really what I'm talking about, but kind of the equity ownership. And the lovely thing is, if you're successful, they become repeat players. You complete one revenue share round and you're successful. They're lining up at the door to do the next one because they're loyal and they know that they're getting the return on an investment. And this is the difference between on the investment they care about. And investors, the retail investor, the non-accredited investor, gets to decide hopefully with the right advisors, right? With their personal advisors, but they get control of what they can do with their disposable income investment play money, because that's what it should be, right? It's not your college, it's not your kids' college savings that you're doing this in, right? It's your monopoly money. But it also has the potential to teach unsophisticated, people who have been blocked from our markets an opportunity to participate, some of whom are smarter than the VCs. They just, because of the ways the laws have been structured, haven't been allowed to sit at the table. And so,
correct.
The unicorns are great. The 3Xs are great. The immediate returns are great. And just also the community support, which, when we did our intrastate offering exemption, we had it structured very similar to Reg CF, which is basically use an online portal that you push everything out. But some of the problems around some of those rules really relate to the way you advertise and the way you market, which I know you're aware of. They're tricky. They're not intuitive. They don't make sense. Why can't I say how much I'm offering my share for while I talk about how great my company is? I don't understand that. But we had pushed forward. It's gone now a $250,000 exemption, which was basically you can put a sign in your window, right? You can put a sign in your window in the cupcake shop that says, we want to open a new, another store three blocks around. Will you help us? And I look forward to the time where we can do that with the right amount of policing, right? Where we say, because part of the issue is a lot of companies, a lot of people think you can do that anyway, right? And you technically, you really can't. You're not supposed to. So there's lots of people who are, you've heard you've heard this soapbox of me, but I'm going to reissue it. The friends and family round, right? There's no friends and family round. It doesn't exist. There is no such thing as an exemption for your friends and family, but people do it all the time. So part of our regulatory structure needs to adjust to put the thing that's already happening onto a path that is not overly burdensome, but kind of gets the guardrails on it, because it's happening already. And so I wish that we could find a way that regulators and Congress really did kind of listen to the people who were doing it every day, right? What are people needing to make this work, and how can we protect investors from fraud?
Yes.
And
It's that.
because, right?
Yep.
How do we protect investors from fraud, and from bad actors? And that's really the balance we're dealing with here. And the long and the short of it is, from an issuer standpoint, you're always you are always going to be held responsible if you defraud someone intentionally or unintentionally, right? If you offer and sell securities without complying with the law, you violated the law. But if you don't give them material disclosure about the risks associated with the offering and enough information that they need to make an investment decision, you've committed securities fraud. So let's get it. It shouldn't be this hard, right? To allow our smaller businesses to have access to capital from the people that they serve and the people that care about their business, at the same time protect those people from fraudulent and bad actors. So I think that essentially is probably what I would love to find. Have we gotten there with CF, a Reg CF? No. Do we get there with Tim Scott's law? I don't think so either. I don't think a free pass for $500,000 in 12 months is really the right threshold with no regulatory, there's a happy medium someplace to get to. Maybe we'll get there now that we have a government that is, in theory, not going to fight against each other. But, that's what the next work is about for us, I guess.
It certainly is. And like you said, it's that balance from investor opportunity and investor protection, issuer opportunity as part of that as well.
Correct.
And I'm with you. I believe it's too difficult to launch one of these campaigns, and that's not speaking with emotion as much as the stats and the amount of issuers that actually do market. You mentioned costs of legal versus cost versus marketing, and I know legal is required, so marketing is not. How many groups actually do it could vary. But when I look at those 50% that don't raise the 110K as we referenced earlier,
they don't have a marketing. They don't have a marketing
exactly.
strategy.
They're not getting enough eyeballs to that offering page. I believe there's a way to do it with very lean marketing costs, but it's more than the monetary assets. If you're a founder, you're trying to run your business, local, bakery, as you mentioned, a few, other scenarios I see reference to regularly, you have 20 different hats on at a time. You're, fulfilling many roles that would be covered by other team members at later stages of growth. To throw this on top of it is difficult. To then take months of your time, of your, actual, cash assets, and then have delays. By the time you go live, you're drained. Mentally, financially, and that is not the end point. That's really the beginning.
Right. And that's the optimize place. So we test, we educate,
testing,
we
the education, the research,
right?
You were mentioning earlier,
and maybe even you test the waters, right? Maybe you're doing that, but then when you're optimizing, you really have to build the right team. Right.
Absolutely.
You have, just like you go out and you get the right CTO or CIO or CMO or whatever you have to get the right team. You have to find the right legal, accounting, marketing. It could be internal. It might not, but you have to find the right portal or broker dealer. But it is a choice. It is not a one size fits all, and the different portals and different different vendors have different strengths and weaknesses. So, but to optimize, you need a team that understands what this is. And you will, I don't believe you will optimize without a team that understands what it is. And then, then you launch, right?
Yep.
And
Go live.
hopefully your optimized plan ends in result, and then you scale because you can do this every 12 months. You do it so I was talking, I don't think I finished my thoughts about the best crowdfunding people are the people that want to use this tool to build their brand
Mm-hmm.
and at the same time have the opportunity to raise some capital.
Yes.
The ideal, I'm using this because I already plan to do a marketing campaign for my company to build my brand. And I would like to use crowdfunding as a way to pump up that the crowd's enthusiasm for my brand and for my mission and for what my products and or services. That's the goal. That is what it truly is about. And that can be small scale. That can be the cupcake shop, right? That can be the pizzeria. That can be the brewery. That can be the, social impact water treatment solution for fill in the blank.
Yes.
Right. But the idea here is that so there's work, you have to get these disclosures together. You have to get your financials together. You have to get your marketing materials together. But once you do that once, the costs of doing it again are nowhere near as expensive because you've learned how to do it.
Mm-hmm.
Right. So it's a bit of an amortized cost. I try to share with my clients that I want you to do it right the first time so that we can amortize that cost over the next time, that all the other times you're doing it. And if you're not doing crowdfunding yet, start to build your skills in writing disclosures. You don't have to do it for accredited investors, but gosh, you better, because you still have anti-fraud liability for failure to provide the material information that they should get. So hone that skill while you're testing, right? Hone that skill, get your research, get your team, launch. Hopefully you're successful. Do it again.
So scale is doing it again. Like you said, you crack the code.
But there's an important thing that I think a lot of investment crowdfunding issuers forget. And this is the difference between public market companies and smaller companies. And it is essential for successfully harnessing your stockholders or your stakeholders. And that is investor relations.
Yes.
Proactive communication with your stakeholders. I don't care whether the SEC says you only have to talk to them once a year. Shame on you if you are not providing quarterly updates to your stakeholders about what is working, what is not working, what you want to do, what you need help doing, so that you get them on board. Because if you get these people on board, that's the scale. So investor relations is key to your scale. Just like you listen to your customers about how you want your product or service to change, you gotta communicate with your stakeholders about what your business is doing, what's working, what's not working, what you want to do, how you need help. It's not that hard, right? It's 4 points on a one-page sheet of paper usually.
Yep.
But communicate with your investors and they will forgive a lot. Proactive communication lets a lot of bad news not be quite as bad. If I only hear from you when it hits the fan, I'm not going to be real happy with you. So investor relations, I think, is a real essential instrument and like proactive tool that many small businesses or that have outside investors forget or think isn't necessary, and that's a mistake.
Absolutely. It amazes me how many issuers do not even maintain that annual follow-up. I've heard some stats around that recently. It's mind-boggling. And to your point, your investors can be worth far more than the initial capital they're putting into the deal. And I say initial because there's later rounds, the
Right, there
lifetime
could be. That's the scale.
value can be higher. And maybe it's just because I'm a marketer, but no, that the notes I hear directly from CEOs that we work with that share with me merger and acquisition conversations that have come out of investments and or investment campaigns, for franchise. I mean, press, all different types of strategic partnerships, well beyond just the individuals that may post every time you have an update. They may be your strongest ambassadors during your next round or towards your brand marketing from there. So I view it as a much larger marketing play than that first round.
That's
and,
exactly
and the
right.
capital coming in at that point.
Yep.
Well, we've covered a lot of great stuff here, Benji. You beat me to the punch on the questions, the
Gotcha.
testing. It's all about the research and having a good understanding of the landscape and what you're entering into, and not just looking at 101 type articles or even just listening to this podcast discussion. It's got a lot of great points. Physically go onto the platforms that'll give you insights about how you should file, about what other issuers are doing around the legal infrastructure, which is crucial. That's your foundation into the marketing and how you're getting people there. And not just saying that because I'm a marketer, but because that's how you could see the
It
top issuers
works.
succeed. Exactly. Then continue to optimize by bringing in the right team, by changing up the team, by bringing in more resources. As a marketer, I always say more, meaning we play well with others. We are commonly brought on board on top of other marketing teams. And I invite that. Even just getting outside perspectives. Benji, I'm sure you're open to a call anytime. I know I am.
Absolutely.
I love talking marketing. I'm sure you love talking legal. We're passionate about this. So speak to experts, even if they're not part of your formal team. Really utilize all of the knowledge and all of the people who have done this before, have been down your path, are willing to give you so you could have those learnings without falling into pit holes yourself, and then scale. Do it again, do what's working during that campaign, do what's working during the next campaign. This is why some groups in real estate and some other types of funds continue to use these vehicles to bring on more and more investors and have goals for where they want to be 5 years, 10 years out. This could be, the pizzeria as well too. It does not need to be, a larger organization. Really applaud that you're a stand for local businesses, smaller businesses, mom and pops, and being able to really leverage these exemptions and bring in their audience. I could tell you, that audience, whether it's a company big or small, can make all the difference towards the success of it. And even, the intrastate laws you've built and how that makes it more accessible and allows them to put the sign up in their store. I've actually seen it for Reg CFs. I've walked into stores and seen, the little desk stands
We're
on top of
raising
the
capital.
countertop.
Go here.
Yep. Yep. And always get excited by it. Again, maybe just because I work in this space, but it's really a way to bring in your customers as shareholders and have them act as ambassadors long term. And that's just one of the benefits that founders have shared with me.
Yep. When it works, it works.
Well, Benji, there's so much in terms of information you've given us. I've taken notes, and these are topics I talk about every day. Where can the audience go to learn more? And what are your final thoughts that you'd like to leave us with today?
Well, I mean, it's absolutely. Most everyone who works in this space, a lot of what we do, we work on goodwill.
Yep.
It's about karma. And so if anyone has a question, happy to, email me, bjones@smithlaw.com. I'm, I think, the only Benji Jones securities lawyer on LinkedIn. I look like this, I think, on LinkedIn. Come find me, ping me. Happy to chat with you. But I really do. It used to be 25 years ago, we would say, Google, get out there, do your research, listen to different vendors with the right amount of skepticism and understand the product different people are trying to sell you, and recognize that some people are filter success rates and simplicity. Don't let someone tell you oversimplify this process. But it's not that scary if we just get it done, right? If you just adopt a plan, it is not any different than developing a new product. So Google is your friend. Vendors in this area are your friend. Email me, email Jason. Jason will talk to you about marketing. He'll put you in touch with some portal vendors. He'll put you in touch with some lawyers. The lawyers will put you in touch with other people. Do your diligence, ask questions, get educated, and then make an informed decision. I also really am beginning to like the whole try a test the waters campaign first, because it's less expensive than putting everything down on the paper at once. Starting to really, there's a debate. We can debate this two-touch issue, whether that's good or bad, but I do come back to Amazon and look at several things more than once. So, and put some things in my cart and then move it to save till later. So maybe some test the waters would also loosen up the market. So, and if anyone wants to know what that means, just call me. I'll let you know.
You heard it here. I recommend taking Benji up on that invitation, get in contact with her. Benji, I'm very excited about the space and where things are going over the next few years and beyond. I know you're going to be, on the front lines there, and it's been an honor to be able to have you on the podcast today. I know you're an authority in the space, so thanks for coming on and testing our audience on how things really work on successful campaigns.
Well, thanks for having me, Jason. And I look forward to working with you all year on stuff.
Absolutely. Likewise. Just getting started. Well, thank you again, Benji. Thank you, everybody, for tuning in. We'll see you next time. Take care.